and there's nothing wrong with having this psychological profile. It all depends on your personality. Me personally, I cannot hold trades for weeks or days, right? But I'm also not a scalper, so everybody has a different personality. Right, our long-term perspective, we're going to use that 4-hour time frame. We've got a British pound US dollar chart, right? First of all, where are we coming from and where are we going? We have to ask the why, right? Long-term perspective. So we've got all these failure swings down here. So we have a clear draw on liquidity, right? Do we have a external range liquidity purge? Yes, we do, right? We've got this purge over here on our long-term perspective. So now what do we want to do after we go external? We want to go internal, right? So we got that break of market structure down here. We have this fair value gap down here. So even if it does not trade lower and lower, there's an opportunity down here. And even this purge up here, we can look for more opportunities. And we have another purge down here until we reach those low resistance liquidity runs down here, right? Those failure swings. So where's that 4-hour turtle soup happening? That external range liquidity rate. We've got one over here, and we'll zoom in and look how that looks on the intermediate term perspective. So now we're diving into our intermediate term perspective, right? And with our intermediate term perspective, we want to be in line with our long term perspective, which is a draw lower, right? Our draw on liquidity is lower. So we can see this liquidity purge up here. So we're going from external back to internal, right? We wait for a market structure shift. So our intermediate term perspective is in line with our long term perspective. We can see initial break of structure happens here, and this market structure break solidifies this bearish order flow, right? So over here, we're trading lower and lower and lower, still not hitting that drawn liquidity, right? So now we wait for what? A 15-minute purge on buy side liquidity, right? We look at these highs over here, relative equal, right? This is low resistance liquidity, so we want to see this go before we want to trade lower. So we have that 15-minute continuation purge. And now it's time to go in that short-term perspective, right? We're going to use a 1-minute time frame to look for our entry setup. Market maker sell model will be in this area over here, right? From this range low to this range high, because we purged that 15-minute time frame over here. And we're going to dive into the 1-minute time frame and see how that looks like. So we got that 1-minute time frame over here. M15, 15-minute time frame continuation purge, right? It is all fractal instead of a 4-hour purge or a daily purge. Now we're looking at that 15-minute purge because we are scalpers, right? Again, market maker sell model is completed once we take out this original consolidation and that sell side liquidity down here. Outline that original consolidation, accumulation phase number 1, accumulation phase number 2, and smart money reversal up here. So what happens after we take that external range liquidity? We are now activating a sell program. So again, all up close candles will now support price lower. Bearish PD range should hold and the bullish PD range should fail, and then we are in sell side of the curve, right? So we're waiting for that break of structure on our short-term perspective. It happens over here. We want to be in the correct time zone, right? We're going to outline that later, but we want to be, as I can see down here, we are in New York kill zone, right? So all up close candles should now support price lower, and we can see that over here. Bullish candles over here are now a bearish order block. Another bearish order block here with a fair value gap. Another bearish order block. Another one, and lastly here we got that fair value gap again and keeps declining lower and lower and lower, and you can see all up close candles are supporting price to go lower. We're going to once again use those mitigation blocks right from the buy side of the curve, extend them out in time to the sell side of the curve, making it higher probability, right? We want to see those fresh PD arrays form on those mitigation blocks from the other side of the curve, which happens over here, right? We've got that mitigation block from the buy side of the curve, which would be a bullish order block in this occasion until we go into external. Now we extend it out in time to the right. We've got that fair value gap here with that order block, and you can see price is neatly going down and respecting those areas too. Now I'm wondering if you can spot something more, and I'll give you a few moments to look at this chart. Do you see what is forming over here? And I'll give you a hint. think about second stage of distribution, right? Got that silver bullet formed, right? So we have that short-term high, longer-term high, and a short-term high to the right of it, that low-risk sell. We break structure, and once again we have that short-term high here, intermediate term high formed here, and then that silver bullet forms in that second stage of distribution. So multiple areas where you can get in, but this is the silver bullet area. Right, so another example we're going to go over. This time we have E-mini Nasdaq 100 futures chart. We are in bullish order flow, right? So what are we waiting for? Internal to external and external to internal, right? So we know from the higher time frame we are bullish. We're coming from this internal range liquidity fair value gap. So how does that look like on our 4-hour perspective? We're still on a long-term perspective, right? Because our intermediate term perspective will be a 15-minute time frame, and our short-term perspective will be a 1-minute time frame. But over here, we reached that discount fair value gap, right? On the 4-hour over here. So we want to go from internal to external, right? We know daily order flow is bullish. We are in a discount array, and with this discount array hit, we can continue up into buy side liquidity and eventually run those buy stops. So our draw on liquidity for our long-term perspective has been established. Now let's dive in to intermediate term perspective, right? We want to line up our intermediate term perspective with our long-term perspective. So over here, we've got a break of structure over here, right? So our intermediate term perspective is in line with our long-term perspective. We can see a 15-minute continuation purge, and I will zoom in a little bit over here because you can't quite see it clearly down here, but we take out this swing low with this candle over here, and thus creating that continuation purge. And with that continuation purge, we can now start to look for our short-term perspective entry model. Right, we got a 1-minute time frame right now. We waited for that 15-minute continuation purge, which happened over here, and you can see it a little bit better now because we're in the 1-minute time frame. Buy side liquidity, our final target as a scalper, right? We're not holding for the whole day. We want to go in and out with our market maker models. So market maker buy model has formed after we create this low. We purge that sell side liquidity and thus going into that buy program. After that sell side purge, we break structure up here, and then after we activate a buy program, what happens next, right? All those down close candles should support price up higher. So we have a bullish order block formed over here. Another BPR over here, right? That redelivered rebalanced PD array. So we know this is a breakaway gap. Using sell side of the curve, right? Again, with those mitigation blocks, we use it into the buy side of the curve. In this occasion, it's a breaker block because we took out sell side liquidity down here, right? And then breaking up. We have another bullish order block formed here. And then we continue up into this high. Now we're going to do some more additional examples so we can outline even better how this forms and all the time frame alignment with this universal model. We got a British pound Swiss franc daily chart. Right? We go from external to internal. This is our long-term perspective, right? This is the why we should go there. This is where we start off. So we can see this external range liquidity being purged over here. The CE of this wick has been hit, so we're quite deep into discount. So after that external range liquidity purge, where do we want to go? We want to go into internal range, right? So we got this fair value gap as our drawn liquidity. Now our long-term perspective has been established. Going into our intermediate term perspective, we know our long-term perspective, we have that internal range liquidity daily fair value gap. On our intermediate term perspective, we got all these failure swings, right? So we know where the liquidity is resting. So we have our bias confirmed after we break structure, right? So we need this external range liquidity purge, and then we wait for that break of structure, right? Over here, we have a break of structure. We have those engineered buy stops over here. Over here, we have no kill zone yet, so no trade yet, right? Because we have a stop hunt over here on the 1 hour, but it's outside of the kill zone, and we really want to be in our time zone before we execute a trade, because outside of kill zones, the probabilities reduce drastically. So over here we see a 1 hour stop hunt, again on our intermediate term perspective. And now we dive into our short term perspective, right? Now we have that 5-minute time frame. Again, think about that long term, intermediate term. They're both in line right now because we broke structure, right? On the intermediate term, drawn liquidity is that long term perspective daily fair value gap. And now we wait inside our kill zone for a break of structure and a liquidity purge. So we have that 1 hour stop hunt, that liquidity purge of sell side liquidity. So buy program has been activated and we wait for London kill zone to start. Yeah, not before, we wait for our kill zone. So now all down close candles should support the price up higher, right? So we can see that over here, got a bullish order block, another one formed over here, and this is all inside the kill zone, right? So that's important. Price moves up again, forming another bullish order block, continues up again, hitting those buy stops for order pairing with sell stops. Now over here, we did not quite reach our draw on liquidity, right? Over here. So we have engineered buy stops for the next kill zone. So the draw is not reached yet, so longs are still valid. Once again, you can draw out your mitigation blocks from the sell side of the curve into buy side of the curve, right? So over here we've got a Australian dollar, US dollar 1 hour chart. Again, we're gonna do another example. This is more of a scalper example, right? Because we are on our long-term perspective on a 1 hour chart. So what has happened over here? We've got failure swings, right? So we have a draw on liquidity down here. What happened prior? External range liquidity, right? Buy stops have been purged up here, thus making us go into sell side of the curve after that happens. We've got some sell stops down here with those failure swings, right? So low resistance liquidity run. And now we dive into our lower time frame. So over here, 5-minute time frame, we wait for a break of structure, right? Important. So break of structure happens down here. Sell program has been activated because we took out that external range liquidity, right? So all up close candles should now act as a resistance and support price down lower. Order blocks, fair value gaps, and turtle soups are high probability above here, right? Above this area, because why? We are in premium, right? So from this discount low into this premium high, everything above this 0.5 level is higher probability than below it. So those PD arrays below this 50% level are still valid if the draw hasn't reached yet. However, there are a little bit lower probability because we're not in a premium level, right? So try to always get in on a premium level if you're selling, and if you're buying, you want to be in a discount level, right? We can see all these bearish order blocks supporting price to go down over here too, over here, and so on until we reach that draw on liquidity, those sell stops. Again, outlining from the buy side of the curve into sell side of the curve, our mitigation blocks, right? Are we having new PD arrays formed inside those mitigation blocks and making it higher probability for price to resist that area, right? We have that fair value gap here. Inside this mitigation block, we have this bullish order block being formed inside this mitigation block, and so on over here, mitigation block into this bearish order block again. Down here, another mitigation block, and we can see all these PD rates formed here are still holding price to continue down lower and complete this market maker sell model. So over here we've got an Australian dollar, New Zealand dollar daily chart, right? And this is going about relative strength analysis, right? So over here, if we want to trade AUD USD, for example, or NZD USD, we go to Australian dollar, New Zealand dollar to see which one is more weak or which one has more strength. And over here you can see AUD NZD is extremely weak, right? Because we can see price action continues to dive deeper and deeper, making NZD stronger than Australian dollar. So in this occasion, Australian dollar is weaker than the New Zealand dollar, so you had better shorts on AUD USD over NZD USD.